All right, Pops, another week has come and gone. This time, instead of kicking things off with data from our friends over at Black Book, let's actually look at Cox Automotive. They have lowered for the second time this year their
Yes.
seasonally adjusted annual sales forecast. How many vehicles they think we're actually going to sell this year and moving forward, down to 14.4 million, Dad.
That's new vehicles. That's
New
not all
vehicles.
vehicles. That's just new vehicles. So that's their forecast for new vehicle sales. And I believe we started the year at, was it 15.9 million?
Yeah, call it 16. Yep.
Yeah, like 16 million. And then they lowered it to 15.3 million. And now they're down to 14.4 million. One suspects that there quite possibly could be another downward adjustment as the year continues, based on the declining sales as we've seen over the last quarter or so.
So we've got, Dad, right now, inventory levels for new vehicles down 280,000 vehicles compared to this time last year. Go back to our channel. Look for June of last year. What were we talking about? The supply chain shortage, the chip shortage, and the car shortage. We are down 1.6 million vehicles compared to this time in 2020. And Cox expects
Yes.
that in the second quarter of this year, so the quarter that we're currently in, a 19.3% decline in vehicle sales, new vehicle sales.
And we're only in that quarter for another 2 days.
Yep. So by the time you're watching this video, we'll probably have new data about all the OEMs, public companies reporting that they've actually had sales decline even more significant amounts, which we've seen some automakers, Nissan, Honda, et cetera, have really, at Toyota, really significant declines in new vehicle sales because they simply cannot produce them enough. Cox's revised forecast, their mid-year review, reiterates how real the shortages are and how much they are impacting new vehicles.
Exactly. And like I said earlier, there doesn't seem to be any light at the end of the tunnel as to when this might end. And if there is light at the end of the tunnel, it's probably an oncoming freight train at this point in time. Hey, you get to declare your independence from high prices from auto dealers. Join YAA. Get 15% off. Just type in July and the number 4.
All right, now a little bit of, I'll call it positive news, and then we'll switch things over and talk about the used car market. Dad, in the second quarter,
Yes.
Cox expects that GM outsold Toyota. The only reason I'm saying this positive, I'm doing a little, like we're in the United States, be proud of our United States automaker, General Motors. Toyota's been struggling mightily with production, while GM has fared okay over the past quarter. So we're seeing GM regain some of the market share that maybe Toyota had been taking from them because Toyota is struggling so much to actually produce vehicles.
Well, and truth be told, last year was the first year in history where Toyota, for the year, outsold General Motors. General Motors had held the position of the number one volume U.S. auto retailer for, what was it, 60 or 70 years or something like that?
Yep.
It was a very long time. That's all I know. And, so they're in a position, I guess, where they can produce the requisite number of cars to restake their claim.
Absolutely. At least it seems like they could do that for one quarter. Now, let's turn our attention to the used car market, Dad. We have the latest weekly Black Book market update. We are now seeing a new trend, a trend that is we'll call it a plateau of vehicle appreciation. So unlike prior and earlier, and if we have the chart up on the screen, months prior to this, we would see huge volatile swings of used car prices plummeting, rising like crazy, plummeting, rising like crazy, plummeting, rising like crazy, plummeting. Now they're not really rising
like
crazy.
Yeah, they've risen, and for the most part, they're still continuing to rise. This was a week where the overall market was actually down to 1/100ths of a point.
Yeah.
So, basically unchanged. But you can see that the truck and SUV segment is the part that brought that down. That was down 11/100ths of a point, 1/10 of a point.
But let's talk about this a little bit, Dad, because I interpret this data as saying we may have found our new normal. This may be our kind of leveling off point, obviously with some variation week over week, but for a few weeks now, we've seen pretty small
Yes.
week over week transitions, or excuse me, changes in price. I think we're at our new normal, our new kind of steady Eddie price point. And so to me, this represents an opportunity where you see a car that's for sale, it's probably going to be the same price in a few weeks. Or maybe like the good old days, people might be willing to negotiate if it's been sitting for 4, 5, 6 weeks, because I don't think we're going to see huge swings. This is my 2 cents. I just don't think we're going to see as huge of swings in used car pricing anymore.
I tend to agree with you, and the days to turn have been increasing slightly, which would indicate to me that inventory is sitting just a tad longer than it had. Now, in the past, for used car inventory, most dealerships operated on what they call a 60-day or a 90-day turn policy. What that means in layman's terms is that dealerships, if they operated on a 60-day turn policy, they gave themselves 60 days to retail that vehicle. If they did not retail it within 60 days of when they first got it, they would wholesale that vehicle either to another dealer or they would take it to the auction to get rid of it. If you worked at a store that had a 90-day turn policy, it was 90 days instead of 60. Yep. And the reason we did that is because the market fluctuated. The market typically went down during those 60 to 90 days. If we see a plateauing or a slight decline on wholesale values moving forward, then that would indicate, at least to me, that dealers that are on a 60 or a 90-day turn are going to say to themselves, if we don't sell it within that 60 or 90 days, we need to wholesale it and get our money out of it and go find something that's a little bit cheaper.
Yep. I completely agree with you. Let's talk a little bit, Dad. Gas prices, they've steadied off themselves, honestly, yes. Come back down just a touch. They're still ridiculously high. The national average at the time of filming this is $4 and around 81 cents per gallon. Obviously, gas prices are impacting wholesale prices. We see compact cars week over week were up nearly 2/3 of a point.
Yes.
While pretty much every single truck and SUV segment was negative week over week. This is a reflection of where there's interest from dealers to be able to actually procure what type of inventory they're going to procure from the auctions, correct?
And when it comes to the truck segment, they're willing and still paying a tad more for subcompact crossovers as opposed to the larger crossovers because they are the more fuel efficient crossovers. And so, therefore, the cost of gas won't impact quite as much whether a customer would consider buying it.
An interesting trend that we're seeing, Dad, is used retail listing volume. It has increased again. This is now a bit of a trend itself. Retail listing volume is up 5% from the beginning of this year. That means the number of cars for sale online, essentially, because that's how I imagine Black Book pulls the data, is 5% higher for used cars than it was at the beginning of this year. That is a great indication, a great sign if you're in the market to potentially buy a used car. Kind of why I'm continuing to say stay patient. The tactics of negotiating and waiting for a dealer to have more of a carrying cost for aged inventory, I think that's going to become more of a reality over the coming weeks. That's at least what I see.
And when you look at the compared to the 2021 year, you can see where that was well below, and so that's why the value of the cars on the retail side were so expensive. And with this situation, we should hopefully start seeing some type of reduction, minor as it may be, but some type of price reduction on the retail side.
Now, a question I have is if we continue to see new cars not get produced, which is likely the reality, if we continue to see elevated gas prices, I think, and this is just my supposition, we're going to continue to see the same pressures that we're seeing on the wholesale market right now. Compact cars are going to continue to become more valuable. We still need data on hybrids and electric vehicles, but they're going to become more valuable than ever before. And my question is, does that mean that if you've still been waiting for that gas guzzler, you've been waiting, give it a couple more weeks, see what happens in the market. You know, it probably continue to come down in price. Do you see similarly to me?
I wouldn't disagree with that at all, honestly. It's supply and demand and pressures from the cost of gas that will impact all of this.
All right, well, we'll keep everyone posted as there's more information week over week. And honestly, not bad news this week. Not good news, but not bad news.
The market has slowed down, which is a good sign, because it couldn't continue at the pace that it has been operating at for the last 18 to 19 months.
And quite frankly, Dad, some of the storylines I'll be looking to over the next coming weeks, repossessions, delinquency rates on loans. Like, I could see another influx of supply if we're seeing more people not be able to afford and continue to pay for their cars. But anyway, we'll save that for a follow-on video when we got some data.
Absolutely. Thanks so much, Handsome.